Hello, hello. Empty house tonight. Been a while. What's up, Nine? It has been a while for sure. I'm still out here to do it for my YouTube people. And usually some people do end up joining in. But empty house tonight. How you doing, brother? Hopefully you're well. Market has been tougher for folks. Yes, yes. I don't know if you've noticed in your Discord. Yeah. No, definitely been a little harsher for people. Twitter too, as well, 100%. The trading is popular when everything is going up easily. When everything is volatile and you get Trump coming in and you have a bunch of things going around, it's really hard for people to. And especially with crypto doing so well right now, a lot less people are in the day trading space. There's a lot more popularity in the crypto space. But I know a lot of my London people are going to want to watch this, so I'm still going to do a quick review here tonight. So if you want to stay in and listen in, well, you're welcome to. Pretty straightforward stuff for me, right? We're always looking at the development of the weekly candle, right? And as we refer to that weekly open, we can see we traded higher and now expanded lower. I was very straightforward in my weekly outlook. If we failed to close below this low, I'm going to look at some bearish price action. So going into today, I had a very simple plan. I outlined it to Jordan actually yesterday. If we don't close below this, I'm going to look for a swing formation. What does that mean? I'm going to look for us to take out previous day low and reverse from that point to start the formation of a higher time frame swing. Now we're very bearish, so going into tomorrow, I'm really going to refer on the overnight trading to understand what I'm going to be doing for the New York session, right? But still looking at this for now, it is still a valid swing formation, so we'll definitely have to see on that end. Sorry, let me just mute this. And if we go down here to our 15-minute chart, right, where everything is easy to see. Let's remove our opening gaps here for a sec. I was looking at the regular trading hours gap today, and we just refer on previous day high and low once we go into replay mode here. Very straightforward stuff, right? You're looking at price to open. We are looking at a pattern of accumulation. As we can see here, price is very back and forth, very high resistance. As I always tell everyone, right, you don't need to be precise with those parts. What's important here is knowing when the manipulation ends, right? When can I expect distribution? And in this case, trading below previous day low was pretty clear for me. This is the high probability low of day. The only thing that would be missing here is SMT. What's up, Fleech? Nice to have you join us. A small squat tonight. Was just getting into it, right? Looking at a very clear pattern of accumulation, manipulation, and distribution for the day. Also looking just overall, it is Thursday, and we just had our previous day, right? Wednesday. And yes, the day of the week matters quite a bit here. Was a large expansion day. So even if you weren't looking for longs here, you could anticipate a retracement to a premium, or more importantly, to the midpoint of the previous candle. And if we look here, I'm actually going to do this. Well, let's use a little something different. Right here, you'll see it lines up almost with the weekly open, and we formed the high of day near those parts. So definitely some very nice price action in terms of the structure. But now in terms of delivery, it was a little bit harder to trade in this case. As we can see, we had our move higher, just very high resistance, and we then had our move lower at the end of the day to at least frame some sorts of retracement. We had some SMT early on at London High. If I bring my crosshair here, you'll notice that London was taken on NASDAQ, but not on ES. So for some people, that might have been a little hard seeing that this move and not considering this a potential for high of day. But it's all about context for me. Why did this SMT occur? For this movement. So this SMT generated the daily manipulation, but I'm always keeping into consideration and keeping in mind, I guess, my higher time frame candle, which in this case, the structure tells me that my high probability trades will be to go long. So looking for long right after the open myself, as we can see right here, 9:30. We did have some early news, but you guys know my rules. If at 9:30 we have a clear Judah swing confirmed with SMT, then I can look to trade before any sort of what is the word I'm looking for, instead of waiting for the news, right? And as we can see here, we did have a clear Judah swing at the open, right? We went a little bit higher, had our Judah swing lower. Now, in terms of SMT, we did have some. Is it the best SMT in the world? No, right? Was it this swing point? I'm trying to look at it. I think it was candle to candle SMT that I was looking at. But I personally did not trade at 9:30. And you see now, I actually can't find the SMT I was referring to this morning because it does seem to be higher with both these swing points. Yes, definitely. So no SMT right at the open, but we had SMT just afterwards. I'll mark it out for you guys just so it's straightforward to see. I do have my SMT indicator that is coming soon, so we won't have to do this for very long. Just like this, we'll be able to see all the SMT. It's going to be very useful for these reviews. Pretty much all the indicators I'm making are to make these reviews easier to do. That is my first priority. But we had SMT right here, which was pretty much at the news release of 9:45. So yes, I was anticipating to have a setup form before then, but we didn't have any structure that would entice me to do so. So for example, if you're wondering why I didn't long this first breaker block right here, because I had no reason to. I had no clear Judah swing at the open with SMT, so I had no right to trade before 9:45. But once we get to that 9:45 and we have this SMT, we have to remember that this forms a breaker as soon as we trade above it. All right, so if we mark it out like this, why is this a breaker block when we trade above it? Well, very simple, the SMT, right? Since this is a lower low on ES, we can treat it as a lower low on NASDAQ. If it's too hard for you guys to understand, and I know we don't have an inexperienced audience here, but more for the YouTube people afterwards, just use the breaker on ES and say, well, if I have a break on ES, I can use it on NASDAQ. That will always be accurate. So you can always do this. And with this breaker, now this unicorn is a little far ahead. I'm not gonna lie to you guys. I personally traded it with a different stop loss than our mechanical 3PD array stop loss rule. But if you were just trading this entry, right, we look at it, you take this entry right here, you're in on this candle, it's in semi-close proximity, right? How far away is that from the breaker block? Let's look at it. It's almost 12 handles right there, so definitely further away. And if we use a 3PD array stop loss rule, we'll notice right here, there are no inversion fair value gaps for us at this point. And I mean, you could use this one, but to be honest with you guys, I did not count this one. I saw fair value gap, fair value gap, fair value gap. This is a little old price action for me to consider. So it gives you a pretty wide stop of 74 handles. And it's very straightforward. It just means that I'm not taking this trade. And what is this level right here? This is your weekly open at this point. I would also consider the liquidity above here, of course. But if we look at our clear objective, 1.19R is not something I'm looking to trade. So what do we do in this case? Well, you either wait for it to offer you a better entry, and if it doesn't, then you don't have a trade. Or what I like to do is tighten my stop. Now, these are what I call my riskier trades. I don't actually have a name for them. These are riskier trades, so I go about it at 50%. I like to frame these as continuation trades, pretty much. So it's not a continuation because it's the first unicorn entry that was offered to me, but it's late in the move for me to consider taking a tighter stop loss with 50% risk so that I can still grab a piece of this move, but I have a lower win rate on these. On these continuation trades, I have about a 40-50% win rate, right? It depends on the month, to be honest. But since that win rate is lower than my good entries, I just do half risk, so it affects my curve a lot less. So in this case, for me, it was a profitable trade. Why did I put it right at this array? if you guys remember my continuation model, your entry would be different here. You'd actually be waiting for a close above this. So you could have entered somewhere like here, which would have been too late in this case. But just trading back down into this fair value gap, I was confident in the move. And as I said, I don't care if I lose these. That's why I go half risk. So I can be a lot riskier and a lot less picky in these setups and still be able to trade. Now, is this something that I recommend to anyone? Definitely not. More so for experienced traders that know their own psychology. But that led to me having a very nice winning idea this morning. That led to me closing the day out with one trade, first win. Definitely very nice thing to happen, right? It doesn't happen quite often these days. I feel like in the last 3 weeks, I always lose one before winning one, but a very nice day. Now, for all of you guys that were waiting for a rise model, you would probably not have taken that because with the 3PD array stop loss rule, it doesn't give you enough risk to reward. So after this level of liquidity is reached, we are in a premium of the previous day's range. This actually just made me think that this indicator is lacking midlines and quarters. Definitely going to be in the future update, guys. But we are in a premium of the previous day's range, right? The current higher time frame range. So can you consider shorts? Well, 100%. Moreover, what is this right here? 10 a.m. So if we frame it based on the 4-hour candle and the 4-hour open right here, we can frame some very high probability trades to look for reversals. Your breaker block was just formed right here. Now, did it give you an entry? I'm going to be honest with you guys, I don't see any. It was truly a higher resistance day. And when you, volume imbalance, sorry. When you have these higher resistance days, oftentimes you just get left behind if you wait for the more confirmed entry, which is the trade I like to take myself, right? You guys know me, unicorns. So in this case, same thing. You would have not had an entry unless this is a fair value gap. Yes, it is. It's a tiny little guy, definitely. Okay, so I was lying. There is a valid entry right here in the premium of that range. With your 3PD array stop loss rule, though, you have fair value gap. You don't have any inversion fair value gaps up till this point, and you have the order block right here. So your stop would be all the way up here. Still quite a wide stop, but as we can see in this case, definitely offered enough reward for that move. Now, of course, if I'm shorting this here, I'm going to be expecting a full-on retracement. What does that mean? 15-minute chart. The current day range, it's at this point in time, right? I'd be expecting for us to retrace to our first discount in efficiency. And as we can see right here, first discount in efficiency is this bullish order block. Now, if my bias is bullish, what does that mean, right? I talked about this quite at length last week. It doesn't mean I can't trade shorts. It just means that I understand that shorts will be retracements and longs will be expansion. So if I'm trading a retracement, this target, which is the first discount in efficiency of my current range, is my full-on target, right? There is nothing afterwards. There are no runners in a case like this. I personally didn't trade this short, but if I would not have taken this long, I would have definitely considered trading this short. And as you can see, would have offered plenty of risk to reward at this point. And this is the kind of setup where I would not have a partial. I would have a break even. Why? Because my partial would not offer enough risk to reward, right? The only good area for me to consider taking a partial would be at this low, aligning beautifully with standard deviations, just a clear liquidity objective. It's also the first level of discount of my latest expansion, at least it seems. Yes, it is. So definitely a very good objective to have there. But does it offer enough risk to reward? No, it does not. Our minimum is 1.7. So this would be my break-even line, where at this point I would go break-even. And then in this case, we return to the order block, which is actually the 930 opening price. So multiple statistical confluences on this level, definitely. So very nice trade actually there. I'm kind of, see, this was a riskier one. And right now, in terms of risk to reward, you're like, oh, well, they're pretty similar. But no, because this would have been a full risk trade. And this was a half risk trade. So I'm definitely a little salty right now. I'm not going to lie to you guys. I'm always honest on that end. But definitely a very nice trade there. Of course, if you miss this, I wouldn't consider taking shorts here. even if it offered enough risk to reward. And we can see right here, we actually had a setup that would not have stopped you out because you have fair value gap order block. Actually, it would have. To see any sort of continuations here would have been stopped, but I'm not taking entries below discount. I'm not taking shorts in discount is what I was trying to say. But definitely a very nice trade there. Nothing more to say. Now, could you look for then another long continuation? Sure, definitely. I mean, with hindsight, it's kind of easy for us to say, well, look at this consolidation and look at this high resistance. But if we take a second and let's just go in replay mode here and you look at this, you're just like, okay, well, we expanded. And let me remove this so we can see price a little better. We expanded, then we had a retracement. We went to our first discount in efficiency, and now we're ready to continue. So at this point in time, I would consider longs 100%. You guys know me. If my model forms and all my confluences are there, there's no reason for me not to trade it, right? I prefer taking a loss and not having missed out than just looking at the trade go on without me. And in this case, would it even have given you an entry? I mean, I'm looking at this. There's no inversion fair value gap on these levels. So it would really need a retracement here. So let's actually remove replay mode. Now go back in replay mode. And look at this. Yes, it would have given you the entry. Would have been a little long on the trigger there. And 3PD array stop loss rule. So you have fair value gap. You have inversion. So your stop would be at the low of that second inversion. Would have been pretty close, but we've seen closer. Definitely a very nice trade once again. I would have looked for the opening range high there, which is actually, in this case, also AM session high. I'm going to remove this and bring back the opening range. So I would have definitely looked for opening range high there. So for me, when I see a trade like this, let's say I'm backtesting, right? When I see a trade like this, I know it's a partial then stop loss, if I even have a partial, right? In this case, we'd go to a 5-minute chart. You guys know it because it's a smaller range, right? We could use a 15-minute for this big range, but smaller range, we're going to be on a 5-minute chart. And our first premium in efficiency is actually this liquidity. And in this case, it would not have offered enough risk to reward, it seems. We can see it right here. Once again, pretty white stops today. Not the best. Well, I mean, 33 handles. This is a first normal-ish stop, I guess. But pretty white stops for the day. This is your mechanical partial, right? Does not offer enough risk to reward. What does that mean? We just went through it. Break even. So even though the move succeeded, for me, that's just a break even trade. And I rather be break even here after seeing this consolidation. I'm quite happy, even if the move worked, because I did not allow myself to be exposed to risk. That's just how I like to trade. I like to be very conservative. And this is how I know that, for example, on moves like these, for me, that's just a break-even trade. Still a valid setup overall that I would consider retaking. Now, further on, after seeing this consolidation, it's very hard for me to frame trades until one side is taken. Right? I always tell you guys, whenever we see consolidation, you wait for a raid. We have a beautiful example right here that would have led to that long consolidation. You wait for a raid, which, what is a raid? We're looking for one side of that range to be broken with, I want to use ICT's words here, displacement, right? You want to see an impulse move, a big move, pretty much is the easiest way to say it. And then you can look to target the other side. Well, that's exactly what happened today, right? We consolidated within a big range. Then we saw a raid, opening range high, lunge high, very clear raid. I could have considered shorts at that point. Would I have considered lunge raid longs? No, that's the truth. Statistically speaking, you have a great trade here, but after this consolidation, the only thing I'm going to be looking for is a short if ever we take out those highs, and I'm going to be framing it as retracement. But in case you guys did trade it, yes, there was a valid setup. You can see the breaker block right here that was formed, had a very nice unicorn, decent stop loss. This is a 2 to 3 hour move, quite similar to the previous ones. Is this a good setup? Yes. With my understanding of the daily bias, it was not today. I was definitely not looking to interfere with this consolidation. I came back. I went to run some errands. I came back to see the PM session, and when I opened my charts, saw this consolidation. I just closed it. But sometimes in the same day, you'll go and raid one side and give you a setup for the other. Let's actually look. This is all dry, by the way, guys. I have no clue if we actually formed a setup or not. So let's look at it. I'm also looking at SMT. Definitely some very clear SMT here that could have given you a very nice setup. But truth is, you would have been in a trade first because you actually formed a breaker block right here, traded here. Do you have an entry? As you guys remember, I need a bearish fair value gap or a bearish inversion fair value gap, but there are none. So here you'd have your breaker, but you have no available entries. So you'd just be waiting for an entry to occur. And I'm seeing here that we did form an entry, but we did not retrace into the fair value gap. Pretty harsh there. Even on ES, it does seem, I'm looking at the values here. The high of that candle, so the low of the fair value gap is 58.90, and this is 58.90. So even then, you would probably not have gotten tagged in with a limit there. Probably have filled, I guess. Pretty harsh. So your only valid entry would have been on this inversion fair value gap right here. So even though you would have been looking for a trade starting here, where we formed the breaker block, right? Let's just bring a different color here. You would not have had an entry right up until we inverted this fair value gap, which would have given you a nice short, right? Definitely. 3 PD array stop loss rule, 1 inversion fair value gap. You have fair value gap above and all the way up to another inversion fair value gap. I mean, this seems like a wide stop, but I was really just zoomed in. It's actually a pretty great stop. Clear objectives below. Of course, I would not have looked at this as my first objective. I would be framing this move as a retracement. So where would I look? I would look at the premium and discount of the most recent range. If we look to a 5-minute chart, I'm looking at this range. What is the first discount and efficiency? In this case, it is this liquidity actually. So very nice distance to look for a stop. And if you guys notice, this is where you can really see the fractal nature of price, right? How every time frame is fractal to one another. Look at all this low resistance liquidity. So you target all consolidations, which lead to relative equal highs, relative equal lows right here, right? In this case, relative equal lows here. You understand those are clear targets. But when you go to the higher time frame, you just have the explanation behind it. This would be a clear partial. This is a case where I could hold a runner, definitely. But would I hold a runner to low of day? No. But opening range low, more importantly as well, the low of the consolidation, first stage and second stage right here, would definitely be some clear objectives. Wow, that would have been picture perfect here. Just before 4 p.m., we would have reached this target. Now, to be honest with you guys, if I'm holding this and I'm seeing this huge retracement, I'm going break even, of course, after the partial. And then I see this huge drop, I'm probably getting out within this candle, right? Huge aggressive drop that took out my target. I'm not going to hold on up until the next one. But definitely a very nice trade here that would have offered actually the most RR of the day. But would I really have waited the entire afternoon for this move? No. That's the truth. I know myself. I can't stay sharp for 3-4 hours in the markets. That's why I have very clear schedules of when I'm going to be looking at price. And it's the first, what does it end up to? The 2 hours in the morning and the first hour and a half of the PM session, which, as you guys know, I rarely trade. Pretty complicated day, mostly due to the fact that it was high resistance, right? You take off all of these high resistance moves. What I mean by this is every time we try and go up, we retrace aggressively lower. You take away all of these moves and you have a very clear structure day where you open, you accumulated, manipulated lower, and just distributed higher with a nice end of day retracement. We're closing the day near the open, definitely not where you want to be in sidebar, but when you form a swing, this is something that needs to be expected, especially after a large range day like we had yesterday towards the downside. Do you guys have any questions? All right. Probably don't think 9 you have any questions. I think you're in here. I don't know if you're the same as me on that end, but sometimes I just like to get other people's perspective. Or maybe it was the fact, thank you for coming, because we were no crowd tonight. But as you say, when the markets are tougher like this, it can get really hard. By the way, this open invitation to question is always free in the comments for YouTube. So if you guys are watching this on YouTube, feel free to ask me any questions in the comment. Chillin'. Awesome. Awesome. High resistance day was a bit of a harder one. If you didn't perform well, don't take it out on yourself, right? These are the type of days where you need to be happy you have a maximum losing amount, right? Whether it's a maximum amount of trades for you guys or a money amount, just follow that rule. And that rule is implemented so that you don't blow accounts on days like these, where you can quite easily get stuck trying to trade both sides continuously. Even reading order flow is hard because it feels like we're at a juncture. Sure, I get it. Honestly, for me, always keeping a 15-minute chart open right next to it, always keeping track of my higher time frame idea is always the best I can do. I don't like days when there are 9:45 news. You're not the first person who has told me that. You're really not. Definitely not. I got, honestly, great trade for me this morning. I really got lucky on that end. If not, really would have been happy if my daily performance was taking this first short and just calling it a day. But for anything else, it would have been a little harder with a break-even trade, just looking at all this consolidation, and there's no way I would have traded this. I'm never still at my chart at this point in time. But as I said, definitely one of those harder days. Don't take it out on yourself. That's why you have a maximum losing day. What's your opening range? I use the first hour. Now, some people call that the initial balance. Some people might call that even different words. I really don't care about what it's called. For me, the name of it is just about respect to the person who brought this concept on. But now, since there was a New York Stock Exchange, people have been talking about the first 30 minutes and the first hour and how they impact the rest of the day. Why? Because we are in trending markets. So we set the trend at the start of the session. That's just how it works, right? Some people like to use 30 minutes. For myself, I will use the liquidity from the first hour, so 9:30 to 10:30, and I will use the deviations from the first 30 minutes. So you guys can see very easily if I just bring so much. I shouldn't open my indicators from this point. Too many things here. I'm looking for range deviations very quickly. Mine. But as you can see from the range deviations indicator, you'll notice that the default is set for New York, for example, set to the first 30 minutes. And yes, those are the levels I personally use when using range deviations. I really like the range deviations. In this case, would not have been entirely useful because we had a very big opening range on those 30 minutes. But something to look at for sure, something to study. But not for tonight. For tonight, we're going to call it a day. I'm going to thank you all for being here tonight. I do appreciate that. But what was I going to say there? I completely lost my train of thought. I am so tired, guys. I'm sorry. A lot of projects recently. I'm going to wish you all the best of nights. Good luck trading tomorrow. And we'll see each other tomorrow night for another price action review, which, early reminder, will be at 5 p.m. EST. I'll throw it in the announcement in a second there. For sure, 9. Thanks for being here. Appreciate that. Yeah, Magic. Nice fucking try with those funded accounts. You guys have a great night. Bye.